Greetings to all, and thanks for returning to Everything Tesla Stock. The stock market has recently taken Tesla on an insane journey. Let's discuss the huge news that Cathie Wood dropped just now. While there have been many headlines about Tesla, Cathie Wood's recent revelation will surely be the most noteworthy. We'll talk about Cathie Wood's startling disclosure and her predictions on the price of Tesla's stock today. Stay attentive to the very end because you don't want to miss this. Before we begin, please click the like button, subscribe, and enable notifications if you enjoy this kind of content so you can be informed about all that Tesla is up to. At Street Petersburg, Florida-based ARK Invest, an investment management firm that oversees billions of dollars in several actively managed exchange-traded funds, Cathie Wood serves as both CEO and CIO. Wood started his career on Wall Street as a stock analyst at the asset management company Janus & Associates and worked his way up to AllianceBernstein as chief investment officer. Thanks to her engaging opinions, which she often shares on her YouTube channel and in her tweets, including the really significant bombshell she recently dropped on Tesla stock, the 66-year-old celebrity investor has amassed millions of devoted followers across social media. One of Tesla's most well-known supporters is ARK Invest, which is led by optimistic investor Cathie Wood. Wood was able to accurately forecast a large portion of Tesla's stock rise from 2019 to 2021. Some believe that Wood's recent acquisition of an extra 3,000 Tesla shares is the major development that will herald a new high in the price, with ARK indicating its optimistic outlook. A stock that many on Wall Street consider to be a miracle, Tesla had some of its best years during the coronavirus outbreak. ARK Invest's founder, Cathie Wood, took a big risk on the stock, and although she has generally benefited from the company's growth over time, she is still optimistic about the company's future despite the current pessimistic forecast. Her conviction is based on the company's innovative attitude, which has helped it get to the top of the competition list for electric vehicles. What we said during COVID-19 about innovation solving problems will move into overdrive, she stated during a webcast. As it develops its autonomous driving initiatives, was Tesla going to be able to produce really exponential growth for a very long time? Tesla has given long-term investors substantial profits. Over the past 5 years, the pioneer in electric vehicles has seen a more than 1,300% growth in share price. This bull run, in the opinion of Cathie Wood and her ARK Invest team, is far from over. In April 2022, ARK revised its Tesla forecast in a recent analysis. By 2026, the price of a Tesla share is anticipated to reach $4,600, said the innovation-focused investment firm. This represents a potential gain over the stock's current price of more than 425%. Tesla electric vehicles, EVs, are selling like hotcakes. Deliveries of the Model S, X, 3, and Y hit 310,048 in Q1, up 68% over the previous year. But ARK's hope for Tesla is predicated on a product that isn't even on the market yet. According to ARK analyst Tasha Keeney, Tesla's potential robo-taxi business line is a major driver, accounting for more than half of predicted EBITDA and 60% of expected value in 2026. Even though Tesla invented autonomous driving technology, all of its cars still need a driver at this point. In contrast, a robo-taxi does not need a driver and does not have pedals or a steering wheel. Although the device hasn't been formally unveiled yet, Musk mentioned on the company's earnings call last week that they hope to begin mass production by 2024. The product could be a less expensive option than the increasingly expensive public transportation. Looking at some of our projections, it would appear that a robo-taxi ride would cost less than a bus ticket, a subsidized bus ticket, or a subsidized subway ticket, Musk stated. Based on ARK calculations, the market value of Tesla shares is $4,600. However, it is not the only figure that merits discussion. ARK Invest also provided bull and bear scenarios for Tesla. The optimistic scenario presented by ARK states that by 2026, Tesla will have sold 17 million cars at an average selling price of $30,000, earned $486 million from autonomous ride-hailing, and had a $5,800 share price. In the worst-case scenario, according to ARK's model, Tesla will only make $51 million from its fleet of robo-taxis by 2026 after selling 10 million cars at an average selling price of $38,000. The projected share price in this scenario is $2,900, suggesting that Tesla still has triple-digit growth potential. The upbeat perspective held by ARK is not surprising. Tesla is the biggest holding in ARK's flagship ARK Innovation ETF, ARKK, making up 9.6% of the fund's total weight. The company's ARK Innovative ETF won the title of Best U.S. Equity Fund for 2020. It is an exchange-traded fund that invests at least 65% of its capital in domestic and global equity securities of businesses relevant to the fund's investment theme of disruptive innovation. Although the growth of this fund has slowed down considerably, Cathie Wood thinks that investors will return to technology equities as a result of their search for truly disruptive innovation, which would restore the fund to its former glory. Because of her distinctive insights into financial markets and her steadfast belief in disruptive innovation, Cathie Wood has a significant and devoted following in the technology and investment sectors. During the Powered Up Tampa Bay Tech Festival, Wood's varied perspective was also on full display at the Mahaffey Theater. There, the CEO of ARK Invest and Joe Hamilton, head of network and Metacity and publisher of the Street Peak Catalyst, had an insightful fireside chat. Prior to talking about cryptocurrencies, inflation, and innovative technologies, Hamilton requested Wood to share a tale with him that he would never weary of hearing, the reason she moved her investing firm from New York to St. Petersburg. Although we did look at a lot of both no-tax and low-tax states, we were drawn to Florida, specifically the Tampa Bay region, because of its vibrancy and because it did seem to us like it was going to be the next Austin, stated Wood. And I do mean the Tampa Bay region, because I don't think Street Peak can do it all by itself. Wood called the advancements in AI mind-blowing. The financial icon claimed that technology advancements are occurring more quickly than she had anticipated, even though ARK is pushing the boundaries of artificial intelligence. According to Wood, there was a 60% decrease in artificial intelligence training costs when hardware and software were combined. She then presented her brand new, off-the-press research assessment on the technology, dropping yet another shocking suggestion. According to Wood, this isn't even our big idea for 2022. We believe we are 6 to 13 years away from the holy grail of artificial general intelligence, at which point we will see an inflection point in productivity, and it's going to be pretty mind-blowing. The recent acquisition of Tesla by ARK Invest may have predicted the stock's new low, but Benzinga points out that the chart contains both positive and negative data, which might still put the company in a difficult situation. Tesla is currently the second largest ETF stake in the company after Zoom. Additionally, in May, ARK Invest purchased roughly 15,858 Tesla shares after selling the stock for $66 million during the company's first quarter earnings call. The chart highlights several different kinds of signs to be aware of, even though recent pickups seem to show that ARK is trying to average higher. Bears anticipate that the stock's 8-day exponential moving average, EMA, will go lower this month, which will impede the bulls from realizing their potential, despite the fact that the chart shows some daily bull flags. According to an analyst's prediction based on a survey taken between May 25 and May 31, if it occurs, Tesla's stock will increase to $863. Like many other manufacturers, Tesla has had a standstill in its Gigafactory. A spike in COVID-19 cases forced the Shanghai plant to close in late March and early April, leading to a 22-day production halt. It's hard to forecast with precision what will happen to Tesla's stock in the upcoming months, given that Tesla CEO Elon Musk just issued a warning over the path of the U.S. economy. Nevertheless, Tesla planned to split its shares 3-1, and the news of the split was made public in June. This implies that while entry-level pricing for investors will completely decrease, the shares held by current shareholders will triple, for example, from 5 to 15. While Gigafactories Berlin and Texas are still ramping up production, Tesla's Fremont facilities set a new record for daily production output in June. Tesla is a market leader in electric cars and is positioned to lead the next wave of technological innovations, not to mention the potential income streams from self-driving taxis and the Optimus humanoid robot. Within Wood's ARK innovation portfolio, Tesla was a relative outperformer until recently. Tesla was ARK's top contributor last quarter, contributing 40 basis points, or 0.4%, to the fund's performance for the 3 months ending on March 31st, despite other components exhibiting notable losses. Even though ARK posted a 29.93% quarterly loss, the fund's greatest losers were